I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Gem International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond, recently discovered in Africa by a fellow Canadian junior. It is expected to sell in excess of 65 million US at Sotheby's, London, June 29th, with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
We're chatting with Chris Vermeulen. His website is thegoldandOilGuy.com. Welcome to the show, Chris.
Thanks for having me, Jim.
You said there's an interesting flow where money's going right now. Where is it going?
Yeah, with the Brexit last Friday, we've seen massive volatility across the board in pretty much every asset class. Obviously, currency, very much currency related, and where a lot of money is flowing are into the safe havens. We've seen money pile into the U.S. dollar index, the U.S. dollar itself, and of course money has jumped into precious metals, as gold is known as a store of value. So we've been seeing money continue to flow into those and hold up very well. And, you know, the future is pointing to, I think, higher U.S. dollar price, higher precious metals. And I wrote about this a long time ago that we could see when we get, eventually we're going to have bad news overseas. It seems like things have been looming, and eventually we're going to probably see the U.S. dollar become a safe haven along with bonds and gold, and that's exactly what we've seen in the last couple of trading sessions. We've seen the U.S. dollar rally, and we've seen gold rally at the same time. And I've had a lot of people emailing me asking me, how can the gold and dollar move up at the same time? Well, you know, they don't always have to be an inverse relationship, and when there is massive uncertainty, it just goes to show when they move together to the upside, it goes to show how much uncertainty there is around the world, and people just are flocking to what they consider staple kind of asset classes. And so gold and the dollar are still definitely that, that safe haven that people want. That's their, it's just their fallback to.
The U.S. dollar, people keep predicting it's going to collapse, yet something keeps happening that props it back up again.
Yeah, you know, it's got a massive chart pattern that goes back a couple of years, and we've talked about this before, that the U.S. dollar index is flirting at this massive support level, that if it breaks down, we're going to see a huge collapse. The only problem is we're seeing other countries and currencies have much bigger headwinds, so it's, you know, we're seeing the U.S. dollar hold up very well, and if things start to implode, you know, start to see a domino effect of things kind of pick up speed, negative news overseas, I think the U.S. dollar is going to hold its value, and it could easily rally and break to the upside. I think we could see the U.S. dollar index rally back up to the 105 mark, which is, going to show some decent gains from where we are now. And I think it's going to hold up really well. And I think we're going to see gold and precious metals hold up really well at the same time. I think those are the safe haven plays where international money is flowing into, so they can just get out of what's going on overseas and kind of sit tight in the U.S. dollar index. I feel as though that's where a lot of money is flowing, and that's where just people seem to be comfortable.
What is this going to do to the U.S. election? Are people going to take a look at what happened in Britain and a split from Europe and how that's going to screw things up? Would that discourage or encourage them to vote for somebody like Donald Trump?
Yeah, I don't know how that's going to affect the whole thing. And, Donald Trump is its own event around itself. That could be seen as a massive negative or positive depending what side of the argument you're on, but I think what happened with the Brexit and then this whole new election and Trump being in there, it's going to be one wild card after another, and I don't know how it's going to play out. I think we're going to see. I think the way I see things going, we're going to see money continue to flow into the safe havens and flow out of equities as we start to near these events, go to the end of this year. I think we're going to see equities sell off. And, I just don't see people being comfortable with investments with equities, holding equities going into all this news. There's really nothing good about what's happening, I think, and people are just wanting to move their money to cash or cash equivalents, kind of like the U.S. dollar, gold, and bonds, and sit pretty. It's just a lot of uncertainty going forward.
We've seen some pretty big drops in the S&P. Has that freaked people out?
It has. That was a huge drop, and, we're finally seeing a knee-jerk reaction bounce today in the equities market. It's Tuesday, and we're seeing, all it is at this point is an oversold bounce. What we've seen across the board in some of the leading sectors and indexes, we've seen a pretty massive breakdown in the chart patterns. And right now we're getting an oversold bounce. We might see it bounce for a few more days, but overall the bias is to the downside. Damage has been done. We are now in a downtrend on the daily chart. And, we could see a substantial drop. The SP 500 is trading at, 2010 today. It's got potential to drop all the way down to the 1800 mark over the next, probably 30 days. It's got a lot of downside potential, a 200-point drop. And that's going to bring us down to a significant support level in the SP 500. And if that level is broken, we are going to see a massive bear market. We'll technically be in a bear market, and we could drop an easy 800 points, I think, from there over the next year. So there's a potential 1,000-point drop in the SP 500 brewing, the way things are unfolding and how we've got, Trump coming into play. We've got a lot of unstable markets in general. Volatility is starting to pick up. And once the fear kicks in and investors start seeing the market crash, because a lot of people are still scarred from the 2008 crash, people are going to not be afraid to call their broker and say, get me out of positions. I don't want to ride this bear market. And I think we're going to see the drop happen very quickly, and it's going to be painful for those not paying attention and taking action.
This isn't a summer where you should really go away and not pay attention to the markets, is it?
Pardon? Say that again?
I said this really isn't a summer. So many people go, oh, nothing happens in the summer. I'll ignore the markets and come back in the fall. This isn't the time to do that,
I think this is going to be just like last summer in August. Nobody was expecting the last week of August to see a huge market crash. And I think this summer is going to be the same thing. I'm hoping we get a bounce in the equities here for a week or two so we can get on a new short position and profit from the falling market. But I do fear that we're just going to see this market go into a waterfall sell-off and start to collapse and not look back and not really give the majority of people the opportunity to unload at a half-decent price.
I know some analysts have been saying, I would say for the last 2 years, you should get out of the markets and go into cash. Have people turned a deaf ear to that, though, recently because nothing really bad happened except for last August 24th? Yeah,
I think when I talk to general public about investing and where their money is and what they're doing, nobody really wants to believe that we are starting a bear market or that things are looking bleak. Everybody, the general mass investor, the general public, seem to all be still very bullish. And everyone seems to think, the oil has bottomed, which it may have. And being in Canada, we've seen the energy sector do really well. So the Toronto Stock Exchange has been holding up, has had a pretty nice rally in a little while here. But overall, all it is, in my opinion, is a bear market rally. And I think we're going to see a lot of downside. And people are not sitting in cash. People are sitting with records amount of margin. You look at the margin levels for trading accounts, it's higher than it was back in 2007, 2008. So when people start to unwind and sell their positions, there are going to be a lot of stocks being sold. and eventually there's going to be margin calls. And I actually talked about this morning in a morning video on the markets, talking about how gold miners, when the market starts to roll over and all this margin, all this debt starts to be sold off, people who are holding gold miners, which is a large group of people, are going to be forced to liquidate. The brokers will liquidate their positions. We saw this in 2008 when the bear market kicks in and brokers are forced to just start selling off people's positions to cover margin. We're going to see gold miners probably get hit and get pulled down for a period of time until it gets flushed out. And that's why I really like gold over kind of miners, because when we do hit a big bear market stretch that could start to unfold in the next 3 months, we could see gold miners get hit really hard as all this margin gets unwound, and people who don't want to sell their gold stocks are forced to liquidate, and it's going to create a waterfall sell-off in the equities market. Gold miners are going to underperform while probably gold and bonds continue to move up. So that's where I kind of see the money flowing in the next several months.
Should a person then hold on if they were thinking about buying a gold miner and wait for this drop and then jump in?
Well, I'm positioned for long-term appreciation for gold and miners. I am much more heavily weighted in gold and silver bullion itself, not so much in miners. I do have some exposure to miners, but that's just to get a little extra leverage and a little bit of juice. But it's something that if I start to see them roll over and we start to see margin calls take place and you start to see bearish patterns form, I'll probably just be closing out those miner positions and either move that money to gold or just hold it in cash until the miners look like they've found a new bottom or support level to put it back to work. I think you should own miners. I think you should own gold. I think they're great investments, but there might be a little bit of pain going forward. But I don't see that happening for a little while. Typically, we'll see gold miners outperform the stock market. So when the stock market starts to sell off here, which it started this week and on Friday, we might see the market continue to move down for another 3 or 4 months, and gold miners will actually keep rising in value. It's when we break these critical levels on the stock market, like the 1800 mark, when we break down to a real bear market from a technical standpoint, when people, those are levels where people are going to start hitting margin calls, and we're going to see mass volume starting to get sold off, and that's when gold miners will be under pressure. Right now, I think gold miners could still be on fire and could still, soar another, 20, 30% before this happens. So I still like gold miners. I just think there will be a time when they get soft and when you probably want to move away from them or just for the time being till they firm up.
We'll have more with Chris Vermeulen right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond, recently discovered in Africa by a fellow Canadian junior. It is expected to sell in excess of 65 million US at Sotheby's, London, June 29th, with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Chris Vermeulen. Chris, right after the vote in Britain, the price of oil plummeted for a few days. Is that going to continue?
I do feel as though that's going to continue. I think, overall, I follow cycles very closely, and I had crude oil topping out in early June, and we've seen it, start to break down. It's had a bounce, and now it's pushing back down near those lows. I see crude oil continuing to move down for about another month. And if we were to step back and kind of just look at all the cycles I have on the key markets, I have crude oil moving lower till the end of July. Or not specifically lower, but at least lower or sideways for the next month. Same with equities. I see the SP 500 moving lower right into the end of July. And I have the opposite for gold and bonds. I see gold continuing to trade very choppy. It'll be kind of higher highs and higher lows, slowly grinding its way higher. It'll hold its value really well. And I have this same for bonds. I have the same type of thing. It's going to kind of be choppy and grind sideways to higher for the next month. And then I think we're going to see the market take a bit of a pause or bounce, where equities will find a bottom probably around the 1800 mark in the SP 500, put in some type of bounce or pause, and we'll see, the money kind of flow out of the safe havens. We'll see gold pull back, take a breather, along with bonds and miners. And then eventually I think we're going to see the stock market break that critical support zone and kickstart a bear market. And then we're going to see gold and gold stocks go ballistic for a month or so, or a couple months, while equities crash in a big way. So, going forward, I think we've got a lot of weakness in oil and equities, and we're going to see continued strength in the safe havens, which are bonds and precious metals.
And of course, oil depends on the driving season. It started early this year because of good spring weather. Will it continue later into the fall?
Yeah, driving's a big part of it. When it comes to also airfare, I'm kind of wondering how it's going to affect people traveling overseas and all that stuff, because there's a lot of uncertainty going on over there. So I think we're going to see overall weakness in crude oil, and I think driving is going to be kind of just as the norm. Really, I don't see a whole lot changing. We don't really have too much of an effect in North America driving-wise, what the BRIEX did, so I think it'll still be fine.
Does China's big demand for oil continue?
You know what? haven't followed that exactly. I would think it does, although I know China is definitely in a recession. They're definitely seeing a lot of weakness. So, as things get worse, obviously demand falls. And if the economy continues to erode, really, I think we'll see crude oil continue to be under pressure. And we talked about this a while ago, that I feel as though crude oil is going to be stuck between that previous high we saw back in September, October last year, which is around the 50-52 mark, and the lows that we saw earlier this year in January and February. I think crude oil is going to be oscillating in this big bottoming range for several months, if not a year, until the stock market actually bottoms from its bear market. And energy stocks are going to do the same. Oil and energy stocks have had a massive rally. They're all up at resistance, and I think they're all about to start rolling over and fade back down as the stock market kind of goes into another nosedive. And, I think oil has bottomed. I think energy stocks have probably bottomed, but I think they're going to trade sideways in a very big percent range until the U.S. large cap stock market actually bottoms and starts a bull market.
How are utilities doing right now?
Utilities are seen as a safe haven play. They got hit obviously really bad the last couple of trading sessions, but they've actually been performing exceptionally well over this year. They've been performing really well as a safe haven play. But almost all the sectors, the broad market in general across the board has formed a very big topping formation since March, and we've seen more. You could argue there's almost a head and shoulders on almost all the sectors and the major indexes on the daily chart since March. And, all those levels were broken. We're seeing a lot of selling going on across the board. Typically, utilities will hold up well. They are a safe haven kind of sector. When we see uncertainty or fear, we usually see people flock to utilities because they're higher paying dividend. They are a type of service that is going to be required no matter what happens in the economy. People still need hydro, water, all those things. So I think they're going to hold up fairly well. They got some shell shock from the Brexit move the other day, so they're trading down and lower. But overall, they're typically going to hold up fairly well in the later stages here. As the equities start to sell off, I think utilities will hold their ground fairly well.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim.
My guest has been Chris Vermeulen. His website is thegoldandoilguy.com. You're listening to HowStreet.com Radio. Our popular YouTube channel is Talk Digital Network. You can find us on Twitter at TalkDigitalNet. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.